time to get updates from the world of business. It's 55 minutes that we have, and here's what we have prepared for you. In Nigeria, talks of petrol price hike is looming, especially with what's going on in the global space. Kenya is set to cut excise duty for betting. And Egypt is leading in Africa when it comes to foreign direct investment and ninth in the world. You're welcome to Business Incorporated. I'm Ini John Mekwa. We start from the global space as usual. Oil prices fell on Friday but remained on course for a third consecutive weekly rise after the White House delayed a decision on U.S. involvement in the Israel-Iran conflict. So for this afternoon, we've seen in the red 1.57, and it's an unusual relationship that we see between both major commodities this afternoon. So 1.57 drop for Brent, bringing it down to $77.28. For WTI, it's on the opposite side. It's a gain of 0.7% at $75.66 a barrel. For that, we see the more liquid August contract went up 0.8%. That's about 56 cents to $74.06. On Thursday, prices jumped almost 3% after Israel bombed nuclear targets in Iran, while Iran, OPEC's third largest producer, fired missiles and drones at Israel. Neither showed any sign of backing down in the week-old war. Brent prices trimmed gains after the White House said that they would decide whether the U.S. will get involved in the conflict or not. Iran has in the past threatened to close the Strait of Hormuz to traffic retaliation for Western pressure. Any closure of that strait could restrict trade and affect global oil prices. Commercial ships are sailing close to Oman, and maritime agency advising them to avoid Iran's waters around the strait and shipping, according to traders in that region. An escalation of the conflict in such a way that Israel attacks export infrastructure or Iran disrupts shipping through the strait could then lead to oil hitting as much as $100 a barrel. And still in the global space, gold prices fell on Friday, on track for a weekly decline as an overall stronger dollar and prospect of fewer U.S. interest rate cuts offset support from rising geopolitical risks in the Middle East. So we see for spot gold is 0.5% in the red, $3,355.49, and 0.5% is what we see cut off the price of U.S. gold to $3,371.80. Spot silver lost more than 1.5, that's 1.6 to be precise, at $35.82. Platinum is down 1.5% to $1,287.47. Palladium is down 0.7% to $1,042.92 a barrel. It's a red metals market, and we know President Donald Trump will decide in the next 2 weeks whether the U.S. will get involved in the Israel-Iran war or not. And that's a major one that's sending jitters down the spine of a lot of investors. Meanwhile, President Trump has reiterated calls for the Federal Reserve to cut interest rates, saying that the rate should be 2.5 percentage points lower than what it has now. The Fed held rates on Wednesday, and policymakers retained projections for 2 quarter points rate cuts this year. And then we come to Nigeria now. Banks in the country have cleared about 95%, that's equal to 170 billion naira of the 180 billion naira debt owed to telecommunication companies since 2019. This was made known by the chairman of the Association of Licensed Telecommunications Operators of Nigeria, that's ALTON, Mr. Gbenga Adebayo. During a briefing, he shared this and explains that although only 3 banks are left to pay the remaining debts, this development signals a vital step towards resolving a 5-year standoff that have threatened mobile banking services, which is a crucial channel for millions of Nigerians, particularly in the rural areas with limited internet access His comments come a day after Alton announced the rollout of a new billing model which allows telecom operators to deduct the standard 6 naira 98 kobo per 122nd USSD session directly from users' airtime balances rather than through their bank accounts. Pension fund operators and administrators, alongside the Commission's head of compliance, have shared updates on the pension fund, including its effort to clear backlog owed pensioners before now. The current status, they say, is that payment has been updated to March 2025. This was disclosed to journalists in Lagos, where the Director General, Omolola Oloworanran, says that it's a new dawn for pension administration in the country. The second quarter PENCOM press conference is a platform to review its work so far in 2025, which includes strategic sessions that should lead to efficient use of pension funds. The Director General believes that work begins only after the backlog of payment has been achieved.
Effective June this month, total monthly pension payments under the Contributory Pension Scheme, the CPS, will increase from 8.3 billion naira to 11.9 billion naira, directly benefiting over 233,000 retirees, depending on their pension account balances.
Sustaining the trust, PENCOM says it has introduced some new ways to handle the administration of funds.
We are establishing a pension legislature working group that will partner with legislators to institutionalize reforms, which we believe is key and very important. 3, diversification of pension assets. We are revamping the investment regulation to expand into other alternative assets and also increasing limits for the alternative assets pension funds can currently invest in. Micro-pensions revolution. This has now been renamed as the Personal Pension Plan. It's been re-engineered for scale, technology enablement, and deep penetration into the informal sector. Effective immediately, PENCOM has launched an uncompromising compliance drive to ensure the Pension Reform Act is complied with by every operator.
The Commission is warning that non-compliance to its act will be met with set consequences without compromise. And as Dangote Refinery launches a new plan for distribution of petroleum products across the country, there are concerns that this move could lead to job losses from other competitors in the downstream sector. However, the Chief Executive Officer of RTC Advisory Services, Mr. Okpeyemi Agbaje, was a guest on Business Morning, says he believes that the initiative, in addition to the adoption of compressed natural gas, will be more beneficial to local consumers and the industry in many ways.
The ultimate beneficiary is the consumer. These measures will lower the cost, they will drastically shrink the cost of distribution in the industry, and that benefit will go to the consumer, to the economy. That benefit will go to offsetting some of the inflationary spiral attributable to cost of distribution of petroleum products. It will reduce general trend towards inflation. It will make the product more available. Those are benefits that one finds difficult to argue that we should deny the consumer in order to protect another segment of the retail chain. In any event, I'm not persuaded that there's any segment of the retail chain, those you refer to, who cannot reorganize themselves and adopt similar tax strategies, change their own vehicles to CNG. In any event, they would even have lower conversion costs to CNG. They may be doing a few trucks. Dangote has done 4,000. So I'm not persuaded that those people, if they are willing to compete and they want to adopt innovation and efficiency mindset, I think every other stakeholder can take similar steps. And in the end, we would have a more competitive downstream petroleum sector. The value chain will be better developed and the products will be more available and cheaper for everybody.
And still in the petroleum sector, the Chief Executive Officer of PetroleumPrice.ng, Jeremiah Olatide, has revealed that petrol price per litre at the depot has increased to between 920 to 925. Mr. Olatide says that since Nigeria's downstream sector is deregulated, that this increase may translate to higher pump price of petrol in the country.
With the Naira for crude policy, and I am sure he has been receiving between 150,000 barrels per day to 200,000 barrels per day. So he basically has been controlling the PMS price to 825, 830 in the last few weeks, not minding the fact that crude oil has been fluctuating. So with that Naira for crude policy that has been in effect since April, the renewal, it has helped Dangote stabilize petrol price. But the reason why we're having this surge is basically for two reasons. The first reason is the recent surge in Brent. The second reason is the inability of Dangote to fix price in the last 3 days. If Dangote had come out to say, oh, my ex-depot price still remains 835, the tension, the prices will start dropping massively because it sets the pace when it comes to pricing in Nigeria at the moment because it controls truck sales in Nigeria. It does close to 2,000 truck sales daily, and it determines prices at the moment.
All right, away from the oil and gas sector now to a worrying issue in Nigeria that's threatening food security, and that's the insecurity we've seen in major states or states that contribute majorly to food production in Nigeria. Benue is the latest one where we saw the president visit the victims or survivors, more like it, and of course that's another part of conversation. But for this afternoon, we're going to look at some of the impact this is having or could have on our food security in Nigeria, and perhaps there are ways that it could be quelled. And we're having this conversation with Special Advisor on Investment and Private Sector Affairs to the Deputy Speaker of Nigeria's House of Representatives, Mr. Guna Okuku, joins us virtually from the United States. Mr. Okuku, good afternoon and welcome to the program.
All right, thank you so much for having me.
So, of course, we do not belittle the loss of lives that we have seen, unfortunately, in the last couple of weeks in some parts, in the northern part of Nigeria. But, of course, these are mostly farmers. These are areas where production is done, food production is done. And I wonder if we can put a figure to the loss that has already been recorded and the consequences, you know, of this trauma that the country is facing at this time.
It'd be nice to look at it from, farming is something that happens in a period of time. So if you don't take care of your crops, let's say from cultivation, weeding, and, before you get to harvest, by the time you apply your pesticide and all of that. So if you abandon sheep, like if you abandon your farm, so a lot of things will happen. So maybe weeds and thistles will take over the farmland because out of scare, out of the communities that are being destroyed. So if I want to put figure to it, so it's a whole lot. So are we talking about the plants, the cultivation that have happened, or how much investment in inputs that have gone into those areas? But I mean, coming to look at it holistically, so I think figures will be, I can't put figures to it, but it's a whole lot. We're losing a whole lot, especially when this heat happens around our food belt, Benue State, Plateau State. These are the food basket of Nigeria. These are places where we cultivate, and so if those attacks continue to happen there, I know the losses are a whole lot, and the food security we're trying to achieve will be threatened. So I think that the figures are a whole lot. Figures are a whole lot.
Yeah, and it's not just about the crops, but because the cattle is also part of it, and already Nigeria spends about $1.5 billion on the importation of dairy imports. One would think that I mean, we have enough cattle heads in the country to give us what we need, but unfortunately, we still have to do a lot of imports, and issues like this insecurity can only make the matters even worse.
Now, the reality is, when this administration started, one of the first things I noticed was the president appointing a minister for livestock. So for me, that was the right thinking direction for me. And then it's just, I believe that, in the nearest future, we'll begin to see a whole lot of programs around this space. Because as far as I'm concerned, I always say this, where the value of a thing is not known, abuse is inevitable. Look at it, that's a lifeline given to us as a nation. If I do a comparative study between Nigeria and Botswana, I'm not even going to Denmark, I'm not going to Ireland, I'm not going to England, I'm just going to be here in Africa, in Botswana. So what cattle or cow contributes to the GDP of Botswana is about 1.8% of their GDP. So that means it's an integral part of the economy of Botswana. So what have they done that we need to do? What have they done that have given them so much result? Now, if you look at it very well, you see that first things first, there's a beef commission which was set up, which is in line with what we have now as the livestock ministry. So in that particular, if you do an x-ray of what happens there, you see that every cow has a name. What that means simply that every cow is tied to someone. So you don't just see cow move around. They use technology. So they are tagging. You use technology to tag each cow. So these things are done for different purposes. Number one, for veterinary purposes. Two, for identification. Three, for taxation. So every cow, by the time he moves until he gets into the butchery, so at that point, that's when the taxes are deducted as the cow is being butchered. Number five is for security reasons. So the issue we're having here is not new. It's happened all over. It dates back to Bible days. The servants of Isaac and his brother. So these are not new things. But what you do is you use technology to begin to solve your problems. So if a cow walks into somebody's farm, let's say, for example, a cow moves from Zamfara and then it gets into Benue and steps into somebody's farm, you don't need to fight the person. At the point when the cow enters the butchery, that's when compensation happens, because monies will be deducted from the person's account and paid directly to the farmer that you have destroyed in person's farm. Because the cow that entered there, from the dashboard, you can see whose cow entered there. So these are things that we must begin to emulate. We see good things and then you begin to embrace them. Now, coming to the dairy industry. You see, you just mentioned the figure, $1.5 billion spent on importation of dairy products in Nigeria. What that simply means is that we don't have enough. We've not been able to produce enough. We've not been able to devise ways to take care of our cow. Because who says we must continue to use the traditional method of, moving cows from Mamfe all the way to Nsukka? Who does that? If a cow walks, imagine a pregnant woman who moves that far. How can the woman lactate? So this is just natural science. It's just something you don't need anybody to tell you. So for you to be able to do 30 to 35 liters from each cow per day, nurture the cow. So I think, even the statement from the president while in Benue, say he's willing to support, ranching, because that's the way to go. We must improve the lifeline that God has given to us.
So, Mr. Okuku, I'll bring it home to you. You are the special advisor on investment and private sector affairs to the Deputy Speaker of the House of Representatives. This is where the power is. This is where you make the laws and follow up for implementation. So I think it comes back to you. I mean, we have this idea running around for a long time, but yet we don't see it happen. Like sentiments take over when it comes to implementation.
Of course, the deputy speaker is very forward-thinking and is a very accommodating person when it comes to new ideas. If you look around him, everybody that's working with him are all experts. So why he's been able to bring people like us in is so that we will be able to bring in our ideas on how to legislate, to bring in those legislation where it's required. Yes, of course, we've been interfacing with the ministry and to see if there are areas where we can support the ministry. So that is ongoing. So those conversations are ongoing as we speak. But beyond that, so we need to also look at certain things. The subnationals, until you get the subnationals to understand the direction of investment, it becomes a bit difficult for you to navigate, because whether you like it or not, federal government will not investment are domiciled at the state level, so they will provide the land that is required. So, like the president said, he's willing to partner with the state. So that means until the states have a robust structure to accommodate some of these ideas, it will be difficult for us to implement. But whether we're working, are we ready to work with them? Of course, the federal government is really ready to work with the subnationals.
So it's one government. So where do we start from? It's the subnationals. The subnationals are part of this administration. So where do we start from? How do we put all of this together and get, these ideas working into action?
Like I said, it's a confluence, right? So investment, yes, the lawmakers will help in legislation, they will help in budgeting, okay, and then but when it comes to investment being domiciled, it has to be dropped somewhere. So there has to be that that's why I keep saying the subnational. So if
I'm just asking, Mr. Kuku, I'm asking your idea of how we can get this started. I'm not putting it on the lawmakers. I'm asking, you brought the idea that, most of it is domiciled in the subnationals. How do we get this coordination started? You talked about earlier the Ministry of Livestock. We have the Ministry of Agriculture. All of these fall under those purviews. So how do we get it started with the subnationals so the beautiful ideas can be actioned?
It's part of this. It becomes part of the engagement, right? So we're actually doing part of the work, advocating. So let there be that, like I said, a confluence. Let there be that conversation. So if that engagement begins to happen, and I know. The last time I spoke to some people in the Ministry of Livestock, they've started engaging, they started talking to states, and they've brought out some programs, looking for states to embrace. They also have a program from the World Bank, and also have so much investment to any state that is willing to embrace the ranching program, and then some extension programs that will make you even understand what the trade is all about.
All right, Mr. Kuku, thank you so much for your time and your views with us this afternoon. Mr. Bunna Kuku is Special Advisor on Investment and Private Sector Affairs to the Deputy Speaker of Nigeria's House of Representatives.
Well, thanks for having me.
Let's take a break now. When we come back, we head to the market and, of course, other parts of the program await you. Stay with us, please. Welcome back. It's still Business Incorporated here on Channels Television. We head to the markets now for intraday numbers with Aneti Edits. Aneti, how's the market looking? We've been on fire in the last couple of days. So exciting to see how those numbers are just flying, and you try to understand what's driving it, but not in all cases.
Well, sorry to burst your bubble, but that fire has been put off.
They poured water on it.
Exactly.
Or is it fire extinguisher?
Well, stocks fire extinguishers. So, and that's no thanks to what I have here. Notable sell-offs in the likes of First Holdco, FCMB, Zenith Bank, Sterling Bank, and UBA. Don't forget that before now, These were the ones that were revving the market, but this time they've
yes,
also...
I mean, I guess it's just normal for investors to take profit. I mean, the profit was so huge.
Exactly.
Moving from, in a day, 114 to 117, but by close of trade, it went to 116. And then yesterday, we went to 117. So, I mean, everybody wants to take profit.
And so far, year to date, is about 14.51%. And it's just about
and it's
almost
just half of the year.
Exactly. Quite impressive.
Exactly.
So, but I'll just call it, just like you said, profit-taking at intraday. But let's give a bigger picture of the market for the intraday market numbers. Let's take a look at the screen there. The last time I checked this market, it was just in the green, more like a flattish trade. It was flattishly green, but then so far it has gone down by about 3 basis points. That's about 0.03%. So, but still holding very well to the 117,800 index level, which it crossed sometime yesterday, and then picking up from that 114 in just one day. So far, in value terms, the market has gained about, if not more than, 2 trillion naira just this week, which is one of the full trading week. Let's not forget that we had about 2 weeks of holiday shortened trading week. The last one we had was about 3 days short, 2 days short, and the previous one was 1 day short. So far the market is still very much in the positive territory, and we hope that that downbeat intraday session would come back into the upbeat and then close the week in the green. But for the Johannesburg Stock Exchange, it's a red there, 0.11%, 94,814.50 for the market in South Africa. And now let's take a look at the markets in Egypt there. It's a red, so suffices to say that the market at intraday is mostly negative for Friday's intraday activities, the session there, not doing too good at intraday, but we're hoping that in the next couple of minutes, less than an hour from now, the market will close in green territory. But it was a green close for Nairobi Stock Exchange on Thursday, up by 0.17%, 144.62. But that's the lowest when you take a look at the others, which are in the thousands, more like almost like a 6-digit for that number. But this is just about some 4 digits there. So that's a snapshot of the markets for intraday and close for Nairobi Stock Exchange. Now, yesterday we talked about the equities market, but this time let's talk a little bit more about the fixed income market. And we're having a review of the market so far this week, the activities that is really what normally shapes the market. First, we had Nigeria's inflation report, which came out this week. We had the green bond. We also had the NTB primary market auction, which between the green bond and the primary market auctions, we had the results here. And just sometime last week when we had that the savings bond, we also had the results also coming in. So we'll take a look. We'll review these activities. How is it? How's investor sentiment? How they been this week? And then take a look at what to expect for next week. So let's bring in Adeola Aremu, fixed income dealer with FSDH Merchant Bank, to give us details, a breakdown of this investor sentiment and what to expect in the coming week. Thank you for joining us, Adeola.
Thank you so much, Edet, for having me.
Okay. All right. So I just mentioned I did a little bit of a breakdown for you there, but can you tell us, give us the overall sentiment in Nigeria's fixed income market this week? You know, if it's been bullish, bearish, or whatever nomenclature you want to use for it.
Thank you. So this week, actually, we've seen the market has been actually very bullish, and that has got across not just even the treasury bills market, but also the bond market, the OMO space as well. We've seen markets, we've seen a lot of demand this week. And just as you rightly mentioned, at the NTB auction that happened this week, we saw that, the DMO offered 162 billion. And sold exactly 162 billion. However, we saw stop rates, decline by about 51 basis points at the long end to about 18.84%. And even on the, 182-day bill as well as the 91-day bill, we saw stop rates for that drop to 18.35 on the 182-day bill and 17.8 on the 91-day bill. Also, we saw the green bond that has been, the 5-year green bond that was, issued. The size on offer for that was 50 billion. and DMO sold exactly 50 billion, even though the subscription was about 91.4 billion in total, and it closed at 18.95%. I think another driver that we've seen this week has been the inflation figure that you mentioned, right? Where we've seen that tip up about 70 basis points from 23.71% to 22.97% in May.
Okay, so now let's delve a little bit deeper into the treasury bond space. What has been the subscription level, and if it has been higher, what does it indicate for investors' demand?
Yeah, so what we saw this week was that subscription actually hit 1.13 trillion at the NTB auction. And going by what was sold, which was just 162 billion, that's a bid to cover rate of about 6.97 times, actually, which shows very healthy demand. And we've seen a lot of that even transfer into the secondary markets, where there are a lot of buyers of these, treasury bills.
Okay, right. So that's for this week, and now let's talk about next week. I know that on Monday next week is the final week of June, and that's when there will be an FGN bond auction. So, but besides this bond auction, what other factors should investors look into the fixed income market, and how will this affect the overall activities at the market next week?
Thank you. So yes, just as you mentioned, we have the bond auction happening on Monday. DMO has actually offered the 2029s. They're actually reissuing that 50 billion, as well as the 2032s, which is a 7-year bond. That's a new issuance, and the offer on it is also just 50 billion. So if we look at the kind of size that is being offered, which is 100 billion, compared to the kind of demand, if we take, a cue from what has happened on the NTB space, I suspect that we'll see very strong sentiment and very strong demand on the bond auction on Monday. And if we then look at how that will, shape the market next week, I would expect to see continuous, demand across board. I think one thing is clear for a lot of investors: if they have to buy now or buy much later in the year, their decision is to buy now, and that's what has, kind of spurred the demand that we've seen across. I think another factor will be the so there's a maturity, there's a treasury bill maturity next week, Wednesday. Thursday rather, but there's no auction on that day. So I suspect that, that maturity, about 283 billion, will filter into the market, and people will look for things to buy, instruments to buy rather. And I suspect that would also just reinforce the bullish sentiment that we'll see across next week.
Okay. So now, as we're gradually counting down to the end of second quarter, how would you, before we give a full assessment and comparison of the first quarter and the second quarter and look out for, so what would you, at the earliest stage, assess the second quarter bond issuance calendar from the DMO?
So this second quarter, we initially got the calendar where DMO was looking to issue the 2029 bond and the 2033 bond for the first 2 months, which is April and May, but then change to the 2030 bond, which will be a new issuance for 5 years, and the 2032 bond, which is a 7-year bond. However, that calendar has kind of changed with the circular we got sometime this week, where DMO is now looking to issue just the 2029 bond, which I mentioned earlier, as well as the 2032 bond. So I think for them, the reason for this will be the fact that they are all just looking at, maybe not selling too much. They can see that the demand is very strong, but I think there's some kind of body language from them looking at how they've not oversold over the last couple auctions. I think that if our tag how they've behaved, it looks like they're not looking to sell a lot of bonds at the auction, and it means that maybe for the borrowing side there may be some kind of change that we may not yet be aware of, because everybody's expecting them to oversell at some point. However, based on the way the calendar has changed between Q1 and Q2, I don't see a situation where they'll be looking to oversell as much as the market may be expecting.
Quite interesting, Adeola Remo, and I'm sure our investors are really eyeing out for what to expect next week as we gradually count down to the end of Friday's trading session. Thank you so much for your time on the show.
Thank you.
That was Adiola Remu, fixed income dealer with FSG Merchant Bank. Now, from Africa, let's go to the Middle East, and we see that, well, these are the only two within the Middle East that are trading, and quite surprising that they're in the green because the Iran-Israeli conflict, which is still riveting around the world, didn't have much impact here for the Dubai and the Abu Dhabi index, both more than 1% at intraday the last time that we tracked there. We have the other two markets there closing Thursday's trading session in the red, and the news there, okay, for the Tadawul was up by 0.20%, but the Qatari Stock Exchange was down by 0.84%. And talking about the Qatari market, the country is warning that the airstrikes from Israel to Iran is putting the energy stability at risk, and says that Israel's targeting of economic facilities in Iran could lead to a catastrophic regional and international repercussions, particularly in connection with the stability of energy supplies. And of course, that has caused oil prices to stumble today. And this is coming amidst reports that US President Donald Trump has delayed taking the decision against, but mulling a possibility of striking Iran. But that decision is expected to come in just about 2 weeks from now. That's according to a statement from the White House. Now, let's move over from the Middle East to the United States, where we see the stock indexes there. They're slipping amid concerns. This is what we just mentioned here, the potential U.S. involvement in the Iran-Israeli conflict. That conflict is just about this has entered the 8th day, and so far the impact is still ahead of U.S. Trading session opening. Yesterday was June 10th, so U.S. market was on holiday. But ahead of the opening bell, 2:30 Nigerian time, the markets are in the red, 0.25% for the Dow Jones Industrial Average, S&P 500 down 0.27%, and the Nasdaq, all of them just about 0.2% in the red ahead of the opening bell for Friday. And from there, we move over to the Asian markets. Asian markets, well, kind of a mixed picture there, and not too surprising. Iran-Israel conflict is still having its own impact there. But this is also coming in the midst of China's interest rate, which has been kept steady, unchanged. So far, that has not that helped to mitigate some of the negative sentiments that we saw across the markets here. So let's take a look at how China's stock markets closed for the day. Well, it's in the red, and the Nifty 50. Well, so far the Nifty 50 is in the red also, but has been able to go back to the 25,000 level, which at some point it fell, but for the close of Friday's trading session, well, that figure has been knocked off, just hanging in the balance there. So, that's a snapshot of the markets for Friday.
Yeah, well, red markets we'll see, because obviously connected to the Israel and Iran war. And, uncertainty coming from the White House. We don't know what president, he said we should give him 2 weeks to tell us his decision if he's going to be part of the war or not. And
let's not forget that there are fears. I wouldn't want to say it's official, but some are saying this could have a wider ranging, maybe like a world war. I don't want to see a world war, but let's not mention that.
Exactly, Anita. Thank you so much.
Pleasure.
All right, we are staying with the markets, but we're looking at European stocks and how they are trading. At this time, we have Chiponda Chimbelu. Hi, Chip. Good afternoon. Welcome to the program. Good to have you.
Yeah, nice to be here, Ini.
So how's the market? What are investors doing this afternoon amidst the red markets in Asia?
Well, it's quite good news today because European stocks are rising after declining for 3 straight sessions. And the Pan-European Stock 600 is actually up around 0.7%. And Germany's blue chip index, the DAX, is also trading higher, around 1.4%, 1.5% higher. Now, investor concerns over the U.S. becoming part of the Israel-Iran conflict have eased somewhat. Now, the White House did say that President Trump, of course, like you mentioned there, will decide within the next 2 weeks whether it will be joining to support its ally Israel in the conflict. So the risk appetite today is a bit higher than it was in the previous sessions. But of course, there are other issues that are still looming, and there are the trade negotiations between the EU and the US, for instance, which are, of course, still ongoing, Ini.
Yeah, talking about the trade negotiations, your new economy minister is in Washington. I wonder what they're talking about. And hopefully something very tangible will come out of that.
Well, that is, of course, the hope on this side of the pond. And Germany's Federal Economy Ministry did say that negotiations between Brussels and Washington are in a sensitive phase. And the goal right now is to find a balanced and sustainable solution. Now, Berlin also stressed what it called a strong and reliable partnership between the world's two biggest trade partners, which is, of course, the European Union and the United States. And the Economy Minister Katharina Reiche also mentioned that the United States is Germany's biggest trade partner and that Germany, on the other hand, is the US's fourth largest trade partner. Now, Europe's biggest economy is also the third leading source of foreign direct investment in the United States, and German firms invested a whopping 658 billion euros in the United States last year. So obviously that does drive the point that tariffs could affect the potential of German firms to invest in the United States.
But I wonder, have you heard anything from the talks? Is there anything we could know from the talks going on there in Washington?
Well, there's been something from the EU's trade chief, which is, of course, Valdis Dombrovskis, and he did say that the bloc is making progress in negotiations with the United States, and that was on Thursday. Now, prior to that, we had, of course, also had a report in the Financial Times that said that the EU may be pushing for an agreement like the one that the United States and the UK struck recently. Now, that kind of deal would, of course, leave some tariffs in place after the July 9th deadline. And that would, of course, leave the 10% reciprocal tariffs on EU exports to the United States. And steel and aluminum would continue to have a higher tariff of 25%. Now, an agreement like the one that the UK made with the United States, of course, wouldn't be a victory for Brussels, but it would, of course, help stave off an escalation of the trade dispute between the two trading partners. But it is, of course, still hard to say where these negotiations really stand, because, of course, EU officials have been quite cagey about giving minute updates on them. And it does really appear that the United States isn't really ready to compromise on much. And the expectations that an announcement would be made during the last G7 meeting in Canada didn't quite come to fruition because, of course, the focus shifted to the ongoing conflicts between Israel and Iran. And, of course, the big question is really whether the United States will become part of that conflict and what the bigger repercussions would be, not just for that region, but also even for the trade negotiations between the EU and the US, because, of course, it does sort of move the focus off of that for now.
A lot of distractions around the world, unfortunately not positive ones. Chip, but I mean, it's our job. We'll keep reporting and following up on those stories. Thank you so much for the update.
Thank you, Ini.
Now let's come back to Africa. The third edition of the EU African SME Summit 2025 is currently underway in Johannesburg, South Africa. The year's summit is focused on scaling Africa's sustainable future, leveraging the African Continental Free Trade Area and European Union's Global Gateway Strategy. Our correspondent, Innocent Semosa, is there and sent in this report.
Organized by European entrepreneurs in collaboration with the EU African SME Alliance, those behind the summit says it aims to promote sustainable development, unlocking new trade opportunities and strengthening business collaboration between Africa and Europe. Delegates at the gathering says small and medium enterprises across Africa must strategically position themselves to fully harness the benefits presented by the African Continental Free Trade Area.
So I think it's all about visibility. So an event like this makes sure that anyone from any place that comes to this event actually can physically meet, greet, talk to people they would otherwise have no access to whatsoever. And that's innovators, it's investors, it's funders, for collaboration, which often brings finance also.
I think Africa's definitely making progress. Even in the 3 years that we've been working with Africa, we started in, I want to say, Zambia, where we worked with an insurance company in Africa to try and help them with their needs, and they were in a very different situation than they're in now.
And this is exactly the kind of shift many young people hope to see, an entrepreneurial system that works for them.
I think young people have the ability to change a lot of things if they come together. I think there's a lot of division with the youth. The youth are divided in class and status, and as well as in business sectors.
Still, others point out that young entrepreneurs and SMEs continue to face tough challenges, from access to finance to navigating complex regulatory environments.
I think generally it's a very tough time for young people in business. Just generally entering the job market itself is quite a challenge. We're still dealing with a very high unemployment rate. And when young people decide to take it upon themselves to create businesses of their own, especially when opportunities aren't being provided for them, there's still the issue of lack of empowerment.
As conversations continue at the summit, one message is clear. Africa's young entrepreneurs are ready to lead, but they need support, partnerships, and policies that help them to thrive in a global marketplace. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
The Chief Executive Officer of the Chamber of Oil Marketing Companies, COMAC, in Ghana, Dr. Riverson Opong, has hinted of imminent hoarding of petroleum products by oil marketing companies to take advantage of the next pricing window, in which he said the fuel prices are set for a hike to about 15 Ghanaian cedi a litre due to the war going on in Israel, between Israel and Iran. The country faces a growing risk of fuel supply uncertainty amid escalating tensions between Israel and Iran, which have sent shockwaves across a global oil market. He was speaking during a Business and Financial Times event. Dr. Pong says that Ghana is low on reserves, which makes the situation even more precarious. And moving away from Ghana, we head to Egypt, where the Minister of Planning and Economic Development and International Cooperation has announced the launch of the World Investment Report issued by the United Nations Conference on Trade and Development, UNCTAD. The report monitors key trends in global foreign direct investment in 2024 and highlights Egypt's position among the most attractive countries for investment, driven by the Egyptian government reforms. In a statement to the Egyptian cabinet, the minister revealed that the report placed Egypt 9th globally and 1st in Africa among the most attractive countries for FDI during 2024, attracting $47 billion in investment. And then in Kenya, the parliament has approved an amendment to the Finance Bill 2025 to slash the 15% excise duty on bets to 5%. Just months after raising it from 12.5%, a move that could further incentivize the practice. During the third reading of the tax bill in Parliament, lawmakers also amended how excise duty for betting sector will be paid, shifting the point of taxation from the moment a bet is placed to when funds are transferred from mobile money wallet to betting account. They said the change is designed to improve tax enforcement, particularly against foreign or virtual betting operators that were difficult to monitor under the previous system. And then we head to Zimbabwe. Gold reserve there has grown to 3.4 metric tons to back the Zimbabwe gold currency that was introduced in April last year. President of the country inspects the Reserve Bank of Zimbabwe's gold vault and reaffirms the administration's commitment to strengthen the currency's fundamental through mineral-backed reserves. The RBZ aims to increase its gold holdings to 5 metric tons by year-end. Speaking after the tour, the president said that growing reserves are essential for maintaining currency stability and building a resilient economic framework. Let's see what's happening with crypto. Yesterday, the color was red. Thankfully, today, that color has changed. So we see a green color this afternoon. It's gone from about 104,000 is what we had about this time yesterday. So, but today it's 106,070.15. That's the price of Bitcoin. 24 hours has gone up 1.16%. Ethereum is also looking green, but it hasn't gone back to the 2,600 level, still 2,500. But in 24 hours, it's up more than 1%. We see XRP hype, and most of the coins are in the green. Cardano too has also caught up with that. But let's see the headlines of what's going on in the crypto space at this time. Bitcoin demand hits record low as short-term holders dump. I guess that's expected. According to data from on-chain analytics from crypto quartz, wallets associated with short-term Bitcoin holders have seen a sharp decline since late May. As of June 19, this group of investors now control only 4.5 million BTC, and that's down from 5.3 million. That was the record in May 27. The numbers mark a decline of 800,000 BTC, or roughly 15.1 in less than a month. Short-term holders are typical investors who bought Bitcoin within the past few weeks or months. In bullish market cycles, this group tends to expand as new entrants buy Bitcoin from long-term holders. Other than that, still in that space, Thailand's SEC, they've launched a public consultation on crypto listing rules. That's in Thailand. The Securities and Exchange Commission of Thailand has opened a public consultation on proposed revisions to the criteria for selecting digital assets to be offered on crypto exchanges. The opinion collection will be done through its website and the Central Legal System platform, or they'll do it through their email. The development follows the SEC board's meeting in June, where the board formally approved a plan to update the listing criteria under the proposed changes, and licensed crypto exchanges would be allowed to list utility. I believe we have one more. So in a June 20 Pulse crypto exchange, Binance announced that Avail has been listed on Binance Alpha and the exchange's early access section that showcases trending and promising Web3 projects. All right, let's talk to Solomon about some of this development and how much, for instance, the Israel-Iran war is affecting prices. Hi, Solomon. Good afternoon and welcome to the program.
Good afternoon, Ini.
Great. So yesterday we saw a red market, but in 24 hours it's gone up more than 1%. Does the Israel-Iran war that's affecting a lot of markets, does it have a say in this?
Yeah, technically it does have a say. It was what crashed the market to around $103,000, causing a cascade of liquidation in barely 12 hours. And right now, investors are still skeptical on if to go in aggressively or not. So basically nothing has really changed, despite we've seen a brief rally to about 105,000 this afternoon. Nothing has changed. There's still a huge chance that we'll still go to $103,000. And the major issue now is we have tested that support about 4 times already. So there's a high chance that if we make a strong move for it again, we would most likely crash below 103,000 or possibly $99,000 or $98,000.
Solomon, that's scary. Below 100 seems scary now. I think we've gotten used to the 100,000 level and we don't want to go lower than that. But there seems to be a bit of calm, you know, even talks between US and China, the Israel war, like market is getting used to it. So what direction do you see the market taking, especially like this weekend, even though we're waiting for President Trump to tell us if he's going to join the, the Israel-Iran war or not?
I'm expecting lots of volatility just the way Bitcoin is moving up now. We might get to 107, but there's a huge chance that by Sunday it would crash again back to where we were a few days ago. So I'm just expecting lots of volatility this weekend up until Monday before we can see a clear direction short term.
All right. Hopefully President Trump will not, drop a bomb all through the weekend. Thank you so much, Solomon Amunde, for your time and your views on the program.
Thank you very much, Ini.
Okay, so that's it on the program. An interesting run from Monday till today, and we'll do better next week, starting, of course, from Monday. I'm Ini John Mekwa, wishing you a restful weekend, but I'll see what the market does at the close of trade, talking about it in Nigeria. But whichever way, it's been a beautiful, positive week for the NGX all through the week. But I do hope we close strong. Bye-bye.